So you have to jump on the YouTube.
Yep.
That opened them off.
No, you have to jump on the live.
Did I hop on? Can you see it?
Aaron,
Yeah.
you want Dennis to jump on the live stream too, correct?
Yeah, only.
I can see him right now. I can see all of you on there.
Yeah, it's good. I mean,
You can see me because I can't see you.
right? You can't see me because my camera is being used for the live stream.
Yeah, I see Aaron. I mean, Dennis, here you go.
Yeah.
I see you right here.
Okay. Oh, there you are. Okay. Yes. Devilishly handsome.
You guys are live on YouTube.
Yeah.
If you like to.
I can't see my
Aaron, if I put him on, is it gonna double, is it gonna echo or just leave him off?
I leave it off.
The live stream.
I can't see my camera, my picture-in-picture.
Does this have an intensity?
No.
Doesn't. Okay.
No.
Oh yeah, I think sometimes.
Maybe I'll just keep it like that. Can you see my picture now on Zoom?
I can see you. Now I see you.
No, I was just seeing if I can see it online. Yeah, that actually works good. I just can't see. Yeah. Okay. Good enough for today. I don't know why. I don't know why it's not showing my picture-in-picture, but no big deal.
Yeah.
Oh, you say you guys do have a new table mic that you're using?
No, it's not in yet.
It's fine. I mean, we could hear you. It's the same thing. It's just not quite as.
She got live.
Rich.
Okay, cool.
Rich.
Wait, I'm getting feedback from you guys.
Okay.
Wait, I'm getting feedback from you. You gotta turn it off. Turn the live stream off.
Hold on. Oh,
Turn the live stream off. You can't be playing it over your speakers.
yeah. Yeah.
X out of it completely.
Yeah. We're trying to.
Did you start it on the same computer?
Yeah.
All right, I have you guys muted. Let me know when it's not feeding back. Okay, now unmute yours. Let's see if we can hear you. I'm still getting feedback.
No.
You got to turn the live stream off. Are you guys running it on his computer?
We're trying to. We're trying.
It is.
Yeah. We've turned it off.
There you go. What was that?
The live stream was off.
Whatever Dennis just turned off was what did it. What was it? No, I'm still getting
Yeah.
feedback.
No, you know what we have to do? We have to turn off everything and then restart.
Okay, just rejoin us and I'll go ahead and get started.
Yeah,
Go
you get
ahead.
started, okay.
Go.
You can go ahead.
Okay. Hey, Aaron Adams here. Technical glitches at play. Thank you for joining us today for the intro to real estate investing. The majority of you have probably found us through our Get Real Estate Education landing page. Maybe you saw something in your Facebook, an ad. You're interested. Today we're going to talk about real estate. We're going to talk about what the opportunities are in real estate, whether you're an active investor or a passive investor. We're excited that you're with us for the next hour. And this same link will be available for you to go back and rewatch it on YouTube, or we'll save it there for you if you'd like to show it to somebody else or share it. But I've been really excited about this year from a real estate standpoint because everything related to COVID has created phenomenal opportunities for real estate investors. I've been doing real estate full-time for 20 years, and I started 20 years ago while I was still teaching high school. Now, what's ironic about that is I started reading books, I started attending weekend seminars, and while the education was important, at the end of the day, the single biggest factor for me in terms of moving forward on my education journey was getting into deals and taking action. And so I want to describe today what's happening in real estate. I want to describe some of the opportunities that are big for active investors, what people are making money on, some of them counterintuitive. We've been crushing it this year in the manufactured mobile home, modular home space. So I want to talk about that. Airbnb's been a big moneymaker for us over the last couple of years. Flipping houses is a big strategy right now that's hot. And so even in a pandemic, there's a ton of opportunity. So I want to highlight that for you. Tomorrow, we're going to do a live stream, same time. We can get you the link for that. Tomorrow, the focus of the live stream is passive investing. And so we're going to talk about how investors across the country, wealthy investors, are taking their 401ks, their IRAs, using them to passively own rental properties. We're going to talk about some of the passive pros and cons of commercial property, apartments, single-family homes by asset class. And joining me tomorrow is going to be my business partner, Dennis Blitz. He was on here a few minutes ago and was having technical difficulties, so he is restarting. Looks like they're attempting to rejoin us right now. I can see you, Dennis.
Hello.
And I can hear you. So I was just mentioning that you were rejoining us on the technical side. So Dennis is in Chicago. I'm actually at our offices in Idaho today. And Dennis and I have been working together with investors. I would say probably 85% of the investors that buy property from us or that invest with us are doing so using retirement money. They take their IRA, they take their 401k, they buy a piece of property inside the IRA goes on the title of the property, and so all of the rent that comes in becomes the growth, just like it would as if your IRA bought an index fund or your IRA bought a stock. And so we're going to take a few minutes today, and Dennis and I are going to discuss that aspect of passive investing. But if that's interesting to you as a passive investor, you're going to want to join us tomorrow, because most of the passive investors that we work with are utilizing those techniques. So we got a lot of exciting stuff that we want to cover, and we're glad that you joined us today. The focus today is not some big pitch. I don't have a package that we're selling. I have found as a real estate investor that if I educate other investors on what the opportunities are, what kinds of deals are out there, and how they can tap into money as a resource, like use their retirement money, then we end up with customers who want to buy property from us. And so I'm not, while I did start my journey as a high school teacher, and as you can see from the websites behind me, Aaron Adams Training and Alpine Capital Solutions, we sell properties to investors, and we sell classes on topics that we teach. And so we have a $99 price point for all of the trainings that we offer. In fact, those of you that we've met through Facebook, you should have already received links to 2 trainings that we did. One is a 3-hour training that Dennis and I recorded on using your retirement money to invest. That one is our Retirement 101 class, I believe isn't that how we have it titled, Fred? Is it Retirement 101? IRA 101 is one of the trainings you should have already received. I have Fred in studio with me today. Many call him Colonel Fred because he was in the Army for 25 years?
Yeah.
And he's here. He's going to be keeping an eye on the chat log. So those of you that, in fact, what we're going to do today is those of you that have joined us today, and go ahead and give us a shout out on the chat log so that we know that you're hearing us okay and in the room. And Fred's going to put his email address in the chat log. We're going to give you a free PDF copy of my book for being on with us today. So just email Fred, give him your name, and we'll send you a free PDF of my book, Tips, Tricks, Foreclosures, and Flips, Secrets of a Millionaire Real Estate Investor. In fact, let me bring you to our Aaron Adams Training website. You can see I have a book that's on the Amazon portal, and it's published by John Wiley and Sons. We're going to give you a free copy of this book, Tips, Tricks, Foreclosures, and Flips of a Millionaire Real Estate Investor. Fred will send you a PDF of that, so email him and give us a shout on the chat feed today. That's our free gift for joining us today. But you can also see on the Aaron Adams Training class, we have 2 trainings that Dennis and I recorded that you should already have. Let's make sure you have those as well. And Fred, you put your email on there, right?
It's on there.
Okay. I see you're welcome, but I don't see your. Did you put a post with your email address? Mm-hmm. Okay. So, and we'll be giving that out at the end of the training today. Also, it's just fred@alpinecs.com. If you'd like to hit him up directly, Fred's happy to send you a free copy of the book. You should have also received a confirmation email from us with the links to 2 of these classes. One of the classes that we sent you is our IRA 101, and let me just here's the IRA training that Dennis and I did. You can see on our website it's a $1,000 class. It's discounted $99. You already have a free copy of that. And in that training, we give you an overview of how to move forward and how to invest in using your retirement money. The other training that we have is our Real Estate 101 training that we put together. And this training I'm really excited about. Again, it's about a 3-hour training that we sent you. This training is kind of like you read a book or you watch the flipping shows and you want to know what's next. And so when I first got into my investing journey, I was teaching high school 20 years ago, and I got to the point where I had read some books, I had watched some TV shows, I was interested in investing, but I wanted to know where my focus should be. So the Real Estate 101 training that we've already sent you the link for to watch is 3 hours addressing that topic. I spent 3 hours with my business partner, Travis Howard, who runs our Charlotte operation, and we walk through for you step by step kind of the pros and cons of flipping, the pros and cons of mobile home, the pros and cons of Airbnb, the pros and cons of commercial, all the different kind of active and passive strategies. We spend 3 hours discussing in kind of a roundtable format what we think your very next step should be. And so you as an investor who's saying, yeah, I want to do real estate, I'm not sure if I'm active, I'm not sure if I'm passive, I don't know what I should start learning about, we kind of help go through a decision tree so that based on where you're at in your life, your retirement cycle, the amount of cash that you have, what some good opportunities for you should be. So right off the bat, as part of meeting us, we're giving you over 6 hours of training, several $100s worth of classes, as well as everything that we're going to cover today. And the training that Dennis and I are doing tomorrow on passive investing is absolutely free as well. And so, let me just minimize this here. So, it highlights the fact that I started as an educator 20 years ago, And Dennis, you were in publishing.
I was in publishing my whole career, and I published a security law, security regulation, rules that every stockbroker has to know to deal with the individuals. So I've had a lot of investment background from the technical side, which is, of course, carries into the IRA industry, so that it makes it very, very simple for a person who has a self-directed IRA to buy real estate of all types, and that's what we want to do.
Now, I want to just take a second and bring up Dennis's webpage for his company. Dennis owns the IRA Club, and why is it called the IRA Club, Dennis? Because it's a lot more than a club.
The IRA Club actually just it sort of stumbled into that name. What happened was, when I left the publishing industry, my company had a 401k, and the company was pretty large. The company had 280 employees at that time, and sold to the Washington Post. That opened up my 401k, which had a lot of money in it, and what was I going to do with that? Oh my golly! And so I started learning about self-directed IRAs. Self-directed IRAs, I said, wow, this is interesting. And look at all the things you can do with it. You can invest in real estate. You can invest in lending. You can do all kinds of things as long as it's an investment for your future. I was fascinated by it. So I started I opened a self-directed IRA account myself and realized there was no one for me to talk to. What are you investing in? What are you investing in? What are you trying? What are you considering? And so I started a club here in Chicago for looking for people who had self-directed IRAs. I thought we'd get together once a month and ask each other what we were doing, ask each other what we'd come across, and we did that. And that lasted maybe a good 18 months or so. We met a lot of nice people, learned a lot from each other. Soon people started saying, "Hey, how do I open one of these for my sister? How does my brother open one? How do I, what's the easiest way to do this?" I started talking to people about that. And one day we sort of woke up and said, you know what, we're doing more IRA business than we are learning about, what other people are doing. And so I said, we'll make the IRA Club a business. I never bothered to change the name. It started as the IRA Club for investors. It just kept the same name as people started to open accounts with us. And today we have thousands of accounts and $500 million under supervision, under administration. So it's grown a lot and people like it. Tomorrow when we do the passive section, we're going to have a little session where we're going to talk about the difference of investing with tax-free money versus your own personal dollars. And the one example that we're going to use is of a person who's going to make a relatively straightforward investment with their own dollars, and he's going to do the same exact investment with his self-directed IRA dollars, and the outcome will be the difference between having 2.2 million or 5.2 million without anything changing except, did I do it with my personal dollars? Did I do it in my IRA? It's a tremendous difference.
If you'd like to join us tomorrow, it's going to be from 12 p.m. to 1 p.m. Pacific time, 3 p.m. to 4 p.m. Eastern time. And Dennis and I are going to focus on that. Email Fred at alpinecs.com, and he'll be happy to send you the link for that passive focus training tomorrow. That's going to be our sole emphasis. Today we're going to kind of really focus on the overview and make sure that you have all the tools in place that we've already put out for you. And you can see from the iraclub.org URL from their website that there's a ton of information on here. So we Dennis and I put together a 3-hour training on how to use your money to invest, and we're going to really dig in on that tomorrow. Now, another website that I wanted to share with you is behind me on the screen. It's Alpine Capital Solutions, and it's just alpinecs.com. This is a good starting point about our organization. Like Dennis mentioned, he's a trustee, so he oversees $500 million of investors' money. Some of that is my retirement money from my IRA, my wife's IRA, Colonel Fred's IRA. Our children have Roth IRAs as well that we've set up. And so you can see from their website on their About Us section, he's got a big staff and compliance department, and here's his leadership team that you can see here. And so compliance people, and so they're focused on helping investors manage and self-direct their money into whatever investments they want. If they want to do loans with their retirement account, own property with their retirement account, invest in the market, whatever they want to do. A lot of investors that we meet have no idea that that's a strategy that they can do, and they've always thought they had to keep their money at Merrill Lynch or at Fidelity. Once we show them how to do that and they get connected with Dennis, how much is it on average to set up a self-directed IRA account?
It's whoppingly expensive. It's $195. And you can literally, as you'll see in the real simple example tomorrow, you can say you can earn millions extra inside that account just because of the favorable tax treatment. It's truly an amazing impact on your overall results.
And so if that's something you as an investor are interested in, you won't want to miss tomorrow, or maybe you just want to invest passively, you want to join us tomorrow, email Fred at alpinecs.com.
I dropped the link in the chat.
And okay, great. He's thrown that link in the chat for you. Now, also, our Alpine Capital Solutions page is for 20 years. I've been, it was interesting. I was at the high school. I started doing flips. I was in Southern California, Menifee, California. And by the third year of real estate investing, I had made 10 times more from my real estate deals than I was making teaching at the high school. And one of the early investors who wanted to partner with me was family, my father-in-law. My father-in-law came to me and he said, hey, I'm a dentist. I have some cash. Can we do something? And I had found a 20-unit apartment complex that I wanted to buy. And the sellers of the apartment complex were willing to go from seller to lender. They said, hey, we're selling this apartment complex for $700,000. You give us 20% down. You give us $140,000, and we'll be the bank for you for a couple of years. And I thought, great. I just didn't know where I was going to get $140,000 because I didn't have that much cash. So I said to my father-in-law, why don't you? I found the deal. I have the loan set up. It's the seller. They're willing to be the bank. I need the $140,000. Why don't you put up the $140,000? I'll manage it, and we'll split the profits. And he said, great. And so we bought the property, and we split profits on that deal. We sold it just over a year later for $1.3 million, and my father-in-law was very happy about that. I was the favored son. And Dennis, do you have any in-laws that are sending you those kind of checks?
You know what? My family, ever since I've done this, my family has been. We do have a group of clients we call the Mooch section.
The Mooch section.
And they all have the same last name. So yes, we have a lot of those. But hey, it's really good to do something good for your family. That's just fine. I'm kidding.
Absolutely.
But I really enjoy it.
Yeah, and so if you'd like more information about my company, our background, then Alpine Capital Solutions is a good place to start. On our Team Alpine section, we break down the bios of all of our team that are associated with us. You can go through and read that. And I have a slide that kind of shows the markets that we're focused on and the markets that we're in. So Alpine Capital Solutions is kind of the parent company. I own a property management called Alpine in Indianapolis. We're managing 1,500 properties out of that operation. We have a construction company. We have a real estate brokerage in Indianapolis. We're also in Kansas City. We have several hundred properties under management in Kansas City. We also have 4 trailer parks that we manage in that operation. That's a good-sized operation. Kansas City, mostly on the Missouri side. We have construction and a brokerage. We also have a modular home dealership in Kansas City. We have a moving and setting company there as well. That's a newer business that we've added. Here in Idaho, we have an Alpine Property Management. We have several apartment complexes. We have trailer parks. We've been doing a modular home development out here. And so we've been busy on that front. In Charlotte, we have several hundred properties there. Charlotte's a big operation for us. We have a construction company. And so I'm a real estate guy. And I'm not married to any one strategy. And one of the reasons I've loved working with Dennis over the years is that many of my clients, people that we don't offer a fund, we don't offer an investing syndication, we don't sell a REIT, it's not a security, we just sell properties to investors. And once we sell them to them, then they turn around and use us on the back end for the management. That's my business. And so Dennis and I are the partners on Get Real Estate Education because we have learned that most investors don't understand all the different ways that they can tap into their money, how they can diversify some of their IRA or 401k by owning real estate. And they also don't know everything that's out there. And so one of the reasons that I put together Aaron Adams Training is because over the past 20 years, I've developed this huge amount of knowledge on flipping and commercial property and new construction and asset protection and IRA investing. And so during COVID at the beginning of the year, I sat down with my partners like Dennis and we recorded trainings focusing on all of the topics that I've wanted to teach to investors. And so my day-to-day business, my day-to-day job is to manage these companies and manage the hundreds of employees that are acquiring properties, doing budgets on properties, pounding nails on properties, leasing, collecting rent, selling. So those are my businesses and my employees, and the education side is how we've decided to get outreach and meet new people like you. So we're excited that you've joined us because if you're interested in investing, Dennis and I can help you. Dennis can help you for a couple $100, tap into money that maybe you'd never thought about for real estate, like a 401k. And then I can help guide you. Are you more active focused? Do you want to learn how to do flips? Do you want to learn how to find deals? Or are you more passive focused? Are you just kind of, I'd like to get some money invested because I've wanted real estate. I just didn't want to be a landlord. Wherever you're at, we feel like we have something for you. And that's why we've already given you 6 hours worth of training to help you move forward on that journey because we feel like we have something for you. If you're broke, you don't have any money, then let's get you into some training, some classes so you can learn and move forward. If you have money and you'd like to invest, then we'd love to meet with you. Now, for years, Dennis has been driving from from Chicago down to Indianapolis to do what, Dennis, every month?
Every month, Aaron does a 3-day weekend, which is probably one of the best weekends. We attend a lot of events. The best weekend that I see for new investors, because the thing I want to stress about what Aaron does, and I think is so important, is that there are tons of classes you can attend. Trust me, I have because of what I do, people have hired us to present and to speak and to attend many of these classes, and very few of those classes that you have seen advertised are really being operated by real people who have real experience in the field every day. They're being, for the most part, promoted by people who are just that, they're promoters, and they know how to get people into a room, and that's what they talk about. And then they always say the thing that I dislike the most about their clients, they refer to them as butts in seats. We have to get butts in seats. And every time I say, no, these are people you want to work with for the rest of your life. Well, the fact is they don't want to work with you for the rest of your life. What they want to do is get you in, sell you a high price package that we'll see go for $10,000, $20,000, $40,000 and more $1,000 of really material that you can learn yourself by, for $19.95 at Amazon.com. And but when they have their event, there's a band playing and there's people cheering when you walk in and etc. The idea is to get you to buy an expensive package. This group is one of the very, very few groups that are actually in the field every day, touching what they're doing what they're saying, and we all know it's the only way to learn. You just can't learn it in a 1995 book from Amazon. You've got to be in the field. And I have asked Aaron to do me a favor for years and years. I would like him to write a book of every mistake that he's made. And because, like they say, success is a terrible teacher. Boy, mistakes are a wonderful teacher. And I think Aaron has had the opportunity to make a couple of mistakes. Like,
Over 20 years, I've been paying off. I call it tuition every time I lose money on a project. But you
oh
know,
yeah,
for in the last 4 years, I've bought over 10 mobile home parks. I was talking to my partner the other day, and you'll think this is funny, Dennis. My P&L looks like garbage, but my balance sheet looks amazing.
oh yes, I know
So
those.
so I have one park that we bought that. There were meth labs in it. There were every stereotype of a trailer park you can think of. Problems with the drainage, problems with the water lines. We're probably a couple $100,000 in the hole on it in terms of our cash flow, but we've quintupled the equity on it. It's worth several $1,000,000 now. We bought it for a few $100,000, but now I don't want to sell it. Now I want to just collect rents on it because now it's profitable. It's paying money. So my profit and loss sucks, but my balance sheet looks amazing. I have a couple $1,000,000 in equity in it,
But those are the kinds of things you're going to share with how you got from point A to point B, because 9 out of 10 people, when they got to point A and everything was wrong, they just fold up their tent, go away, lose their capital,
sell the
and
property
say,
for a
"You
loss."
see, this was the worst thing that's ever happened to me."
Yep.
When many of those things turn out to be very, very good if you know how to navigate, through the trenches.
So 9 times a year we do a live training in Indianapolis. Dennis and his team come down from Chicago. The next one is September 11th, 12th, and 13th. We also have one in October 9th, 10th, and 11th, and then November 13th, 14th, and 15th. We call it our cash flow field training because it allows you as an investor who's most interested in passive investing to come to our biggest operation in Indianapolis, where we have 1,500 properties under management. Meet the team, meet my Charlotte partners, my Idaho partners, my Kansas City partners, meet everyone related to investing, and then buy deals. And so if that's something that you're interested in, we'll be talking more about that tomorrow at the passive training that Dennis and I are doing. Dennis, I was reading an article today that I've actually put on our Alpine Capital Solutions Facebook page. Let me bring that up here for a second. If you're on Facebook, search for Alpine Capital Solutions, but Indianapolis is number 3rd in the country over the last month for occupancy in their hotels.
Wow.
And it's because they've been, the COVID has been so low in Indianapolis that they're doing events again. And I actually posted this article on Alpine Capital Solutions Facebook page because we've had California investors say, hey, I want to come buy properties. I want to come learn what you're doing. But is it okay to travel to Indianapolis? And, we do live stream the event. We'll be live streaming it in September, in October, in November. Fred can get you dialed in on our team there if you're interested in watching the live stream. But if you're interested in attending, Nashville was first in hotel occupancy in July. Indianapolis was 3rd at 52% occupancy in our hotels, which is really strong. Oklahoma City was first, 60%. Milwaukee was 2nd, 54. Indy was 3rd at 52. If you'd like to see that article, go to Alpine Capital Solutions Facebook page. I posted that this morning, and check that out. So whether you're comfortable traveling and coming live, we'd love to have you join us. If you're not comfortable, then we can send you the link because we will be live streaming it as well. In fact, COVID has helped Dennis and I move almost 100% of what we offer to live stream, to online trainings, because so many of our clients aren't comfortable traveling and we don't want them to miss out. So hopefully that gives you some background on who we are as an organization or as two organizations and what our motivation is. We feel like we're going to give you as much education as you need, low-cost education, and then when you're ready, Dennis and his team would love to have you as a client and help you with your IRA investing. If you'd like to invest in real estate, like to own a business, and from my standpoint, we want to just help you on your real estate journey, whether you're an active investor or you're a passive investor. So let's dig in for a minute and really talk about what's happening in real estate right now, because there's some very unique trends that are happening that are COVID related, and so I want to spend a few minutes really highlighting what the opportunities are. And I have on this slide the 5 top reasons why this is a good time to invest in residential property. And this was published a couple months ago. Security. Dennis, why has residential property been such a secure haven? Many of your clients, probably a good percentage of your clients, own residential property as part of their investment. Why is security such a benefit right now?
You know, I'm so glad you asked that because I was just writing about that topic just the other day. Pardon me. And you know what? This stock market, let's go to the stock market for a second. The stock market has been, I can't tell, or you can't tell, because is it a panacea, or is it a suicide march, and everybody's going to walk off the edge of the cliff? The stock market is really now being traded by speculators who aren't even good speculators. They're buying stock that goes up because it's going up, and they're selling it when it goes down. And they're really acting much more like they're playing musical chairs than they are investors, And so what happens is, I can tell you that the smart money were watching very quietly and very, very assertively, moving to what they want, which is not the hottest stock of the minute. They want investments that are stable and predictable. And in times of uncertainty, the person with the portfolio that is stable and predictable is king. Residential real estate is surely the most stable and predictable of investments. If I buy a house, I have a pretty good idea what that house is going to be able to rent for. You also, and you can tell us better than everybody, that the likelihood of it being rented, because they're not putting together as many replacement houses as the industry needs. And so the reliability of the income, the predictability of the income is golden, especially in uncertain times.
While you mentioned that, Dennis, I put up on the screen here, this is the rent history in the U.S. starting back in 2006. And for those of you that remember, the market crashed right here in 2008, right? So the market crashed. You had $3 trillion of retirement money that evaporated overnight when the stock market crashed. You had U.S. home prices that in some markets like Florida and Arizona, people lost 40% in property value. But look what didn't drop the last time the market crashed. Prior to the crash, rents had been, whether you're looking at it from median or average standpoint, rents had just been kind of plugging along. And ever since, they've just gone up. And it highlights the reason that the wealthiest Americans keep a large percentage of their net worth in real estate, because that security benefit is a huge motivator in times of uncertainty. No one, I had an investor say to me the other day, well, if Biden loses, the market's going to crash. I had another investor say, if Trump wins again, the market's going to crash. I had somebody say, wait till the end of the third quarter. When the third quarter earnings reports are announced, the markets crash. Wait till the fourth quarter. None of us know what's going to happen. I mean, you got people saying right now, look, the market's back. It's good. That was the shortest downturn in history, and we're back. What do we got, Fred?
We got a question on the chat rooms. How have your rent collections been? Have you seen rent collections?
Great question. So it's been excellent. So let me give you Indianapolis as an example. Okay, Indianapolis is our largest market, so it's a good sample size. We're managing 1,500 properties in Indianapolis. And what we've done is we've really gotten in front of communicating. When you've screened your tenants correctly, prior to COVID, so if you look at last year, on 1,500 rentals, we only averaged about 7 or 8 evictions per month. And now we've had March, April, May, June, July, and now August of rent collections, and we're still only averaging about 5 to 7 evictions per month. Many of our renters who've been affected by COVID have benefited from the stimulus checks that came out. They've benefited from the additional unemployment money that was given to workers, an extra $600 a week that they used to pay their rent. Indianapolis set up a really great rental assistance fund that paid 3 months rent. So when people could show that they've been laid off as COVID related, We've had quite a few of our tenants who were in trouble, got money from the rental assistance fund at the local level. And what we've done is we've proactively communicated with every one of our tenants with text messages, with emails. If we don't hear from them, we go knock on their door. We find out what's going on. We're very proactive about rent collections because we already did a good job of screening. We've already had an extremely low eviction rate. Indianapolis has been our most, in Kansas City, we're at 100% collections on a couple hundred properties. In Charlotte, we're at about 99% collections. So those smaller markets, here in Idaho, we haven't really been affected at all because everybody in Idaho is already socially distanced. So it really hasn't been a big effect because keep in mind, for every waiter that lost their job in a restaurant, they were able to go to an Amazon warehouse if they wanted, or an Albertsons and get a job. And so keep in mind that and in fact this week I actually posted on the Alpine Capital Solutions Facebook page that unemployment now in Indianapolis has dropped again, and just to quote it, it's
110 for the state.
Yeah, Indiana's state is at 7.8%, so it's already back down significantly. And with the assistance programs that have been out there, we just haven't felt the pinch. Obviously, if there's not any more assistance, which that's a possibility, I think there could be a pinch. But and we've put some people on payment plans. But it really highlights the last time the market crashed in 2008. Okay, so when the market crashed the last time, you had a segment of the population. You had your upper middle class and wealthy homeowners and renters who dropped down because they got laid off, or they found work for less money, or they couldn't afford to keep their home, retirees. So they dropped into this middle class and blue collar renter and homeowner bucket. And what we saw in 2009, 2010, 2011 is that bucket just really filled up because very few people were graduating out of it. College graduates weren't getting jobs. People were, two family income homes were becoming one family income homes. And so people graduating up to middle class kind of went away, whereas people continue to fall down into this bucket. Now, certainly you had some people that fall into the low income bucket, college grads who couldn't find a job, single income that lays off and goes back to school, or middle class retirees that really had a low income retirement. But this blue collar and lower middle class renter bucket was always full the last time around, and we're seeing that again this time around. And when you look at vacancies nationally, take a look at this picture. On the left here, you have vacancy rates, 4, 6, 7, 8, 9, 10% vacancy rates, going back to 2006 all the way to 2019. Now, this figure was actually published in January of this year, and you can see that the higher end, the 4 and 5 star apartments and rental units were trending at the beginning of the year at around 9% vacancy. That has only become worse because of COVID. It's only gotten worse. And so if I'm here's the three groups that are just getting annihilated from COVID. Higher end rentals. So think about in your market, if let's say you're in Northern California, that's like the $4,000 a month range. In Indiana, that's $1,000 a month. But the rents over $1,000 a month in Chicago, that's $4,000 a month. The rents over $4,000 a month, the trendy apartments that were built over the last few years in your area, they've really been struggling. But at the beginning of the year, our blue collar, our 1, 2, and 3 star lower income and blue collar segments were thriving. They were extremely low vacancy, partly because builders don't like building blue collar and lower middle class housing. It's much more profitable. It's much sexier to build the high-end stuff. And over the last 8 years or so, we've really been underbuilt. So COVID has exacerbated that. It's made it worse. And so if I owned, and I don't, all the apartment complexes that I own tend to be blue collar. My trailer parks are blue collar, lower middle class. The homes that we own and manage and that we're buying in Charlotte and Kansas City, in Indianapolis and Idaho is blue collar, lower middle class. Those have been thriving because that's the group that's swelling, the renters in that population, as it's related to COVID. And so we've continued to lease properties at a phenomenal rate. We've continued to stay full and to continue to fill our properties. And it really mirrored what happened the last time the market crashed. Now, the other group that's freaking out, that's hating life right now in real estate as a result of COVID, are the commercial investors that own retail. So think of the investor that owns a strip mall, and it's had a huge amount of shutdown volatility, restaurants and sandwich shops not being able to stay open. You know, because if you own commercial retail that has a drive-through, you've been great. You know, you've been killing it. But commercial walk-up retail has just been crushed. And so anything related to commercial property that has to do with hotels, that has to do with sit-down full-service restaurants, that has to do with commercial retail, that segment of real estate is getting hammered right now. So as an investor, if you need, you know, let's say you've been renting your office building, you've been thinking over the past years, yeah, I just can't afford to buy. Now could be an amazing time for you to buy. Let's say you own a business that you've been renting from some commercial lender, triple net lease, and you have an opportunity to buy your own business. That's going to be a phenomenal opportunity for you. Remember, the last time the market crashed in 2008, real estate was the cause. So many of you remember we had subprime mortgages that they called them liar loans. It just allowed anyone who had a pulse and a 650 credit score to get 100% financing on a home. You know, those kinds of loans don't exist anymore. They were really shut down by the Dodd-Frank legislation that was passed shortly after the last crash. And subprime mortgages contributed to it, and as well as we were really overbuilt nationally. So if you look at this chart right here, see if I can zoom in on it for you here. Oops. I don't want that. So let's see. There we go. So this chart right here shows new construction going back to 1980 to the present, and the black line is the actual amount of housing units that we've been constructing, and the blue line is the number we need, and we need about 1.7 million new housing units built a year. Our population has increased over time very steadily from babies being born. You have immigration that's driving the growth and the need for housing. Going back all the way to 1980, that's the number we need every year. And you can see from the black line that it changes drastically in terms of whether builders are boom or bust or broke or have a lot of loans. And so prior to the last crash in 2008, we were overbuilt by some estimates as high as 4 million homes that we didn't need. And since 2008, we've now had 12 years of being severely underbuilt. Some years where we only built 600,000 or 700,000 housing units in the country. And so when you look at going into this year where we were in terms of housing units, we really had some shortages. So look at this chart that shows rentals as of January of this year, pre-COVID. And you can see that this goes all the way back to 2007. And then it shows the rental units in terms of availability. But we had dramatic declines in low-cost rental units basically for the last 4 or 5 years. So starting in 2012, our rents under $600 have been declining. Starting in 2014, our rents from $600 to $1,000 have been in decline. And collectively, between the two, we've lost about 4 million rentals. The only thing that's been going up has been our higher end. But again, now that COVID, it's really hurting that segment. And that was partially why we had an increased number of units, an increased vacancy. And so the opportunity for investors like me, I don't like the higher end stuff. I mean, it's sexy. If I want to drive a friend by and impress them, those are great. But trophy investing does not make for a wealthy investor. you got to follow the money, and you got to follow the opportunities. So you want to follow where are we short, what segment, and that's been in the affordable housing rentals, and where are the lowest vacancies, because as a landlord, that's what you're looking for in terms of opportunity. And so with COVID, the last time the market crashed in 2008, they called it a black swan event. And what does that mean, Dennis, when you hear that?
Well, of course, the black swan, for years and years, we never thought there were black swans until somebody one day saw a black swan, and it was a big deal and talked about it. And today there's still very, very, very few black swans out there, but there are some, and every now and then it happens. And so that's why these things get called black swan events. I want to talk about something on this topic because I too own real estate and I too own have loans outstanding, and two things. Number one, fortunately, they're all being paid on time. I mean, I get the rent, on due date, not 10 days late or 2 days late, but on the due date payment. So I get on our due date. So on one hand, I think I've been lucky. On the other hand, no, I don't know that it's luck, but it was, thoughtfulness. I've got a bunch of stuff in Indianapolis, for example, and isn't Indianapolis a unique situation? Because Indianapolis has got lots of things, but two things that have made it particularly strong in this market and for future markets. The first one is the Indianapolis, if you look at it on the map, it's a hub city. It's not an airport hub city, it's a transportation hub city. If I've got an automobile company, I'm going to put, a storage unit, facility, warehousing in Indianapolis, because every freeway is going to, go out through it. It's a web that I can get in and out of Indianapolis with my merchandise. And so what has happened during this crash? The warehousing jobs, the shipping jobs, the transportation jobs are busier than ever. Every trucking company needs truckers. Every warehouse needs employees. Just fulfillment is a giant business, bigger than it's ever been. And they're in a hiring mode. The second thing about Indianapolis that gives it this, lifelong unique position is it's a state capital. And boy, oh boy, God love them, state capitals just keep paying. You don't have to come into work. Matter of fact, you don't have to do anything, but you just keep getting paid. And so it's a state capital. It's a transportation and manufacturing hub. So, you drive around Indianapolis, not in Indianapolis, drive around Indianapolis. And it is every large manufacturer you can think of has got a 1 million square foot facility churning out whatever it is they're churning out. So it's a very, very solid market, like many Midwest markets are. One of the most misleading things that all of us watch is, because it's on television all the time and it's what we read in the newspaper, is government statistics. Giantly misleading. Not that they're wrong, they're right. But every time I read a government statistic, I want to say, wait a minute, you have to tell people that's an average, right? And most people are not average. It's like life expectancy. What's your life expectancy? 87 and a half years old. Well, that only means half the people will die before 87 and a half, and half the people will die after 87 and a half. That's all it means. I just assume I'm on the better side of that. But the same thing with unemployment. The government statistic was clear. During the second quarter, the economy contracted by 39.4%. That is a giant contraction. But I'm in business. I don't know anybody that contracted 9%. I know people who contracted 90% because I have friends who are in the restaurant and hospitality industry, and I know people who are skyrocketing. If you know anybody in home furnishings, if you know anybody who puts pools in the ground, if you know anybody who sells office furniture, and on and on and on. So some businesses, yes, are down 80%. You're right. But some businesses are up 50 and 60%, and we watch the earnings come through, and they are tremendous earnings beats while the economy contracted 39%.
Yeah, when I was reading that unemployment statistic for the state of Indiana a couple days ago, I was like, well, that's great that they're under 8% unemployment already back to getting at the state level in January. Indiana was at around 4% unemployment, but Indianapolis was about a third less than that. And so the figures that I have seen is that while the state is back under 8%, Indianapolis itself is back under 6%. So it's already back in the 5% range. And that was mirrored during the last crash. Indianapolis is a very diverse economy. Charlotte's a very diverse economy. Kansas City is a very diverse economy. That's one of the reasons why we're investing in those bigger markets. They've all been rebounding extremely well. And if you'd like to see some of the articles that I've been posting over the last few weeks and months, go to Alpine Capital Solutions Facebook page. And, I love that, while Dennis, you were mentioning distribution, I actually showed an article that I posted 10 days ago. Walmart, I was reading an article today that says that Walmart is going to give Amazon a real run for their money, and Walmart is hiring drivers and buying trucks, and you can see here they're putting a $150 million facility, is one of a dozen distribution centers that have entered the Indianapolis market since 2011. Logistics are a big deal. Distribution is a big deal. And so, yeah, there's some restaurant workers that haven't been hired back, but there's plenty of work. And so people are just, this black swan event is changing the opportunity. But you can see, I posted an article just a couple days ago. U.S. existing home sales rose 24% in July from June, and it was even higher than that in Indianapolis. And I posted today about Charlotte. Check this out. The inventory for homes in Charlotte plunged 47.5% from last year, with just 1.3 months of supply available. And normally, a year ago, Charlotte had a 3-month supply, and economists like to see a 6-month supply. And so people are saying, well, is real estate going to get affected? Yeah, you'll absolutely have some people that get laid off and end up going through foreclosure, losing their home. Those homes are going to get snatched up. Real estate was not the cause of the economic disruptions that we were seeing like it was in 2008. And so no one's forecasting, and we're not seeing at any level, real estate to be part of the problem going forward. In fact, real estate historically has been one of the solutions to pull us out of depressions or recessions. And it's happening again because builders are gearing up to build. I can tell you that we've been putting homes on the market on the development side and getting multiple offers on those homes almost before we're even done with them. When we put a rental up for a rent, we get 15, 20 applications on that property right now. And so, if you're an investor that's made a lot of money over the last 10 years because the stock market has just been going up, why not take some of those gains and diversify into property? Why not jump into that? I have a slide here that highlights the 5-point criteria that I utilize for what makes a good market. So I like housing affordability. So I don't love California for rentals because the median home price to median income is a horrible ratio. Chicago's tough. I like low unemployment. We've just been talking about that, and that's why you'll see those articles that I upload to Alpine Capital Solutions kind of center around that. I like steady population growth. Kansas City's growing, Indy's growing, Charlotte's on fire. Charlotte's one of the top 2 growth markets in the country. We got a question, Fred?
No, yeah, about 5 minutes.
Oh, about 5 minutes. Okay. The state government is something that we look at. When you buy and invest in real estate, you're buying a business in that state and in that city. And so we look at the how landlord and business friendly the state is, and then we look at the city itself to see how financially solvent it is. And so as I've looked at real estate from a national level now for the last 20 years, I didn't grow up in Indianapolis. I'm not from Kansas City. I didn't go to high school in Charlotte. I've lived all over the country for the last 20 years. And so, for example, we were in Dallas for a very long time. We were selling rental properties to investors in Dallas in 2009, 2010, 2011. We haven't sold a rental property from Dallas to an investor in a few years because we felt like the opportunities with Dallas had diminished for a number of reasons. And so we've been encouraging our investors to sell. And think of the investor that we sold a property to back in 2009 in Mesquite, Texas for $60,000 that's turned around and put it on the market for $130,000, $140,000. Their question to us is, what's next? And so if you have money to invest, you're definitely going to want to jump on with us tomorrow. email Fred at Alpine Capital Solutions and get the link, because Dennis and I are going to continue this conversation on passive investing. We're going to break down for you how you can capitalize on it. And we're going to talk about some of the different asset classes that are out there. We're going to talk about the pros and cons of apartment complexes, the pros and cons of single family homes. Because I always get someone that says, I like apartments, I don't want to own single family homes. And I'm like, you don't know what you like, because maybe that's all you've owned. And so from someone who's owned a lot of different asset classes passively, we want to break down for you what those opportunities are. So email Fred, get the link to join us tomorrow. We look forward to that conversation with you. I'm going to throw Fred's email up here again. So we have the next passive training will be tomorrow, and then on October 3rd, we're planning a full one-day summit. So if you'd like to join us for the one-day summit, reach out to us. Let us know. We'd love to connect with you on that. And we're going to have Dennis on there. We're going to have some tax and legal asset protection experts on. We'll have the partners from our different markets on there. So there's a lot we're going to cover in that full one-day summit of education. Again, no cost to you for that. And so hopefully this has been valuable today. We definitely want to end on time, because I know some of you are joining us on lunch break. But we will send out the link to this hour today. Fred will send it to you whether you're here or not, so that you can share it with somebody else that you're interested in, or you can go back and rewatch any portion of it that you may have missed. So we appreciate you joining us. We appreciate you engaging with us, and we look forward to having you with us tomorrow or at one of our future events. Dennis, any final words?
I want to stress for anybody who's saying, should I do this? Shouldn't I do this? Should I come back? Should I not come back? Because I've done so many events, there is nothing more valuable than being with people who have done it and done it and done it, and made mistakes and learned from those mistakes, and are willing to openly share what they've learned.
All right, hopefully we'll see you with us tomorrow. Thanks again for your time today. Thank you, Dennis.
Good day.